Hello guys, how are you? Today we will start from the accounting equation, that is assets is equals to capital plus liabilities. You all know that this is the accounting equation, that is assets is equals to capital plus liabilities, and uh, the explanation of this equation should be it is a fact that no matter how you present the accounting equation, the total of both sides will always equal each other. Like assets should be equal to capital plus liabilities, and no matter how many transactions there may be, the actual assets, capital and liabilities may change, but the total of the asset will always equal the total of capital plus liabilities. Or reverting to the more common form of the accounting equation, the capital will always equal to the assets of the business minus the liabilities. Assets consist of, the assets consist of the property of all kinds, such as building, machinery, stock of goods, and motor vehicles. Other assets include debts owed by customer, accounts receivable, and the amount of money, like organizations, bank account, cash at bank, cash in hand. And the liabilities include amount owed by the business for goods and services supplied to the business, and for expenses incurred by the business that have not yet been paid for. They also include fund borrowed by the business. Capital is often called the owner's equity or net worth. It comprises the funds invested in the business by the owner plus any profit retained for use in the business, less any share of profit paid out of the business to the owner. This is the accounting equation. You may present it based on your understanding, like resources, what they are, is equals to resources who supplied them. Assets is equals to capital plus liabilities. Whenever somebody starts business, we need to create few transactions based on the business. So there must be the introduction of capital in the business. Let's say on May 1st 2021, Mr. Alex started business and deposited $60,000 into a bank account opened specifically for the business. So here we use the term open specifically. That means he used it for only for the business purpose, not for the personal use. So what should be the impact of this transaction? How we will create the journal entries? The impact of this transaction in the balance sheet as at May 1st 2021, like here we say May 1st 2021, is equals like cash assets, cash at bank is $60,000. Okay, because he deposited the money into his bank account. So asset, cash at bank 60,000, and the capital is 60,000. When we will pass the journal entry of this transaction, so it should be cash at bank debit and capital account credit. So this is the same concept. Here we are explaining the impact in the balance sheet, and it is the journal entry like debit and credit. The second transaction is the purchase of an asset by check. After starting his business, he decided to purchase asset for his business. What asset he purchased on May 3rd 2021? Sorry. On May 3rd, 2021, Mr. Alex buys a small shop for $32,000 paying by check. He buy a small shop for $32,000 and paid by check. So in this case, the effect of this transaction in the balance sheet is assets will increase. That is the shop he purchased. We have to enter this in the assets shop, $32,000, and he paid it by the check. So the cash at bank will decrease by $32,000 and remaining cash at bank is $28,000. When we total this, it is $60,000. That is same. Okay, the assets are same, but the assets has been increased as he purchased the shop for $32,000 paid from the bank. So the bank balance is decreased. The net assets are equal, and the capitals is equal at this stage, that is $60,000, because there is no change in the capital. So here we can observe that in these two scenarios, as we discussed earlier, that assets is equals to capital plus liabilities at any stage, whatever transactions, whatever the business purchase or like business consume, the assets should be equal to the capital plus liabilities at any stage. Here it is equal, here it is equal. Okay, so now we will look into another example. The third example, the purchase of an asset and the incurring of a liability. He is purchasing an asset and also incurring the liability. How it is possible? Let's take an example. On May 6th, 2021, Mr. Alex buys some goods for $7,000 from you can say D. Smith and agrees to pay for them sometime within the next 2 weeks. So here Mr. Alex buys some good for $7,000 from D. Smith and agrees to pay for them sometime within the next 2 weeks. He's not paying cash, he's not paying from the bank, but he will pay within 2 weeks. So here is the concept of the liability that we will discuss. The effect of this is that a new asset, stock of goods, is acquired and a liability for the goods is created. The stock of goods is acquired and a liability for the goods is created. A person to whom money is owed for goods is known as creditor. Okay, so in accounting we are using the term creditor for the person whom money is owed for goods is known as creditor. We can say in the balance sheet the impact of this transaction on May 7th, the balance sheet as at May 6th 2021, assets shop, as we discussed earlier, he purchased the shop for as we discussed earlier here. This is the continuation of the transactions. He purchased the shop, so we will continue these transactions. Okay, the shop he purchased initially $32,000, and then stock of goods. For this transaction, stock of goods 7. This is also the asset. Okay, and the cash at bank, because he is not paying anything from the bank or from hand, so it will remain same, $28,000. So here when we total this is $67,000. So Mr. Alex buys some good for $7,000 from D. Smith and agrees to pay for some time within the next 2 weeks. He is not paying right away. He will pay within 2 weeks, so it is our liability. So liability will be, we will decrease, we will use to minus it from this. Okay, so 7,000 will be reduced and it will remain same, $60,000. This whole is 60,000, and after that the capital, there is no changes in the capital to date, so it is same. So 60,000 is equals to 60,000. So now you will say why we are deducting this creditor, this liability from these assets. Initially we learn about the accounting equation. Assets is equals to capital plus liabilities, right? This is the accounting equation. When you will apply this accounting equation here in this example, so you will see assets minus liabilities, this is simple math, is equals to capital. You understand? Assets, these assets minus this liability is equals to this capital. Okay, so this is very simple concept. So at any point of time the assets should be equal to capital plus liabilities, or you can say asset minus liabilities is equals to capital. meaning is same. Okay, in next lecture we will discuss more transactions and the impact of these transactions in the balance sheet, and we will pass the journal entries as well. Let me know if you will understand the concept, and if you have any questions, you can send me the questions, you can ask the questions, I will reply you whatever you think the topics you want to cover. I will explain those topics as well. So let me know your response on this, and thank you very much for your time you have given here. Thanks a lot. Bye.